Good morning. Happy Tuesday. So the long weekend got the market in a pleasant mood, breaking out of this range here. And the pattern certainly did suggest that's what was going to happen. And we discussed this last week. I discussed it in the letter over the weekend that this pattern was different than the prior times coming up to these highs. And the difference was, and as it came up here, this move up, wide range bar after multiple bars up. This one just kind of petered out at the prior high and reversed back down again. And this is where, if you remember, was it here? Yeah, our internals gave the sell signal, which was short-lived, came down here. And sentiment is now even at a more bearish level, but this is not unusual as a market begins to move up as this one is. And so the difference here was we had the wide range bar coming out of this pullback and bottoming tail bar at this point in time. And at this resistance area, it went sideways. And price action like this sideways at resistance at the top of a wide range bar is bullish. And the trading over the weekend, there was this dip and it came back up and now prices are breaking out. And these are the futures, of course. And at the moment, they're above the 200-day moving average and above the 3,000 level that we've been talking about for, I guess, some time now. So this sideways price action and breakout suggest a move up toward this prior swing high, pivot high. It should happen, I would say, relatively easily. Now, take that from a historical point of view of this pattern, of one in which it should follow through and at least go up to there, right? I'm saying at least go up to there, and that should be a stalling point. So anytime you get a resting period at resistance, especially with a bottoming tail bar that takes out a prior low and pops back up again, and it starts to move, the interpretation behind that, and what we do here as master trader, is looking at price patterns from the point of view of the psychology of the pattern. What is it telling us about participants? So each time it came up to the 200-day, they started selling immediately, right? Here, here. And this time they're saying, no, I'm willing to sit here, let it correct. If you have something to sell, like you did the last time, we'll take it. And now, because of that price action resting period, this should be a launching pad to where prices can push up to this level. And well, we'll see what it does when it gets here and potentially exceed it and continue to push up. That's really the unknown. But in the moment, as we look at a pattern, we say this is historically what this pattern is signaling. And they're quite extreme, Alex. So we're going to take a look, at the internal sentiment. It could get, of course, more extreme, and it probably will today. We'll see where it closes. But the breadth has been deteriorating, which isn't abnormal during a sideways consolidation, where it spiked up high over here, which said, hey, this is going to continue to go up, even though it reached an extreme. So let's take a look at that. Let's see if I got it here. No. I had a very unenjoyable start to my weekend where my computer, one of those fun things where you have to wipe everything out and reinstall the operating system. So I don't know why this is moving around like this, but I guess it'll get fixed over time. That shouldn't have moved up. So until I get the quirks fixed in this, hopefully today. I'll see if I can find that chart. There we go. All right, so Let's get rid of some of these lines. It kind of gets messy for now. Okay. All right. So sentiment, it's up way up here, pushed up to the static 0.8 level. So we've got these bands that adjust with different market environments that have worked historically for many, many, many years. And so now as this is reached up at this high level, we know that there is a high risk for longs. I haven't tried. It's on the laptop, Zeke. You know, it's kind of above my tech level to know how to do that, but I'll look into it. Anyway, you know what it is, a pain in the neck when this something happens and they're, Microsoft got in there and did their thing and then reloading everything. But this isn't on my trading system. This is my laptop that I use to chat. But anyway, so this is the put call ratio day to day, spiking up here, up at this upper level over here. So, while it was up here, the wrong way option traders saying, hey, it's going to go higher. And they do get it right, just like a broken clock every once in a while. And here it's spiking up. And breadth, I said was deteriorating. So now with today, I imagine with a gap up like this, at least at the open, the day-to-day breadth is going to be probably like, or the AD line is going to be around plus 2,000 or so, which will drag this up. And so this is already at a higher level, kind of came down and bounced back up again, and it'll push both of these up to an extreme. So I got an email over the weekend, someone saying, hey, when I read the letter and some of your posts, where it was on Twitter or whatever. And so, I've got some of these bullish long positions. Do I just get out now? I was like, no. Internals don't tell us the moment that anything's going to turn. It just tells us that we're in the area. Prices tell us when the turn is. And so he went on to say, well, how do I know? I said, well, sometimes it's very obvious where you get a green bar and prices, let's assume something like this at the close, and prices gap down the next day under the low. And that's an obvious, really bearish pattern. Whereas sometimes prices go up and the turn happens rather slowly, and kind of like a little sleepy turn that really catches everybody off guard. So we don't know how the turn is going to happen. We just know that when the internals line up like that, risk is growing. So you just take that into your trading and say, hey, you know what? And as I told him, he said, well, how should I manage it? And I said, one of the things you could do is, rather than managing from the daily time frame from your swing positions, you can begin to manage from the hourly time frame. And when you get a bearish pattern, whether it's an M top or a head and shoulders top or a break, well, you can exit those positions based on the hourly. It's a way of tightening up and doing it objectively. So right now, things are moving up very nicely on the futures. And you can see here, this consolidation resulted in a break to the upside. So at the open here, I think the fact that prices are up as they are, I think some caution is in order as far as initiating new longs. And if you have long positions that you held over the weekend, from a short-term basis, things start tightening up, right? Prior swing low on the hourly, selling covered calls, different strategies. So in reality, we don't know whether it'll crap out today, whether it'll continue to move to here or continue to move up. We just know that it's not down here where the internals were bullish. And so now we've just got the opposite of that. We've got the opposite of the bullish scenario down here. And now we've got a bearish one. So we take that into day-to-day trading respectively and say, look, at this time, when something like this happens, it's to be respected more so, right, over here than it was over here. Right? All right, let's see if I can find my list again here. That's not the list. I hate this. All right, but it happens. Manage windows. Minimized. Nope. Oh, geez. I don't know what the hell's doing this. Okay, so let's see where we go from here. So futures are clearing the 200-day, and let's look at the spiders. So I put this arrow here. This is where our internals gave a sell, and we're getting our internals giving a sell here. You know, the breadth, as I already mentioned, has room to go up. Anyway, so 302, right up here, it's got room to here. So it would make sense when we now look at, well, SPX levels. Well, we got to go till tomorrow for SPX. I mean, I'm not kind of off with the holiday here, but they're good. Today is good. Today is good. Okay. So down below here, right, should be perfectly fine if we can sell premium down below this level here. You know, 291. What is this day's low here? Data window. Friday's low was 293. So I think 292-ish would be okay. 302. I mean, that's big. You got a huge area of support. So, and no, this should not be violated. So this is our wall here. So if we can sell premium below here, which may not be too much, we should be fine. And as far as above, right, what we'd like to see, this is strong. So who knows where it's going to stop going up. But so we've got this area up here. Let's see what the low of this bar is. 303. Interesting. 303. We're at 302 already. So it's coming up into this resistance area. Let's put that over here. So let's assume this continues to push up and we look for an M top or some kind of reversal. And then I would say we sell a call spread above 311, 312. I haven't looked at whatever, but up above here, after we get, say, a 5 or 15-minute reversal, some kind of bearish pattern, I think up above here should be safe. We sell that and then let it drop however it's going to drop. So the premiums pop up down below here. Let's look at SPX. So let's drag this down and do the same thing. Yes, so above 3,100 should be fine. Right, so give or take up here. So the same thing. We watch the 5, 15-minute. You know, this is push. It's already up here, up above 3,000, and we look, you know, at our spiders or futures and look for a bearish pattern, something that looks like it's setting an intraday high this morning, and then sell up above here because that's where the premium is going to be. Then we watch it correct and do whatever it's going to do on the downside and let the premiums come up on the downside. Okay. Qs. All right, we know that they've been the strongest all along. And so now they are coming up. Even my lines are gone here, my shortcuts. All right. So, you know, here's the old high around 97.80-ish. Looks like 97.80-ish. Oh, no. 97.50-ish. So again, resting period, pushing up. And interestingly, look, these are deteriorating already. Where the others, I guess the money's coming out of the leaders already. And this sideways pattern where we saw the S&Ps pop higher, this is already coming down, which is suggestive. Well, if this is getting weaker, it is possible that we should guide our thinking toward this is probably not going to be too far behind. One is going to drag the other, right? in the other's direction. It's typically what happens. As we look at, I'm more interested, I know the Dow is probably going to look like the S&Ps, and yes, it does, and it's got plenty of room to push up. 200's way up there. But what a beautiful consolidation pattern. It's just textbook of a consolidation at the top of a trading range with a bottoming tail breaking below, and then the breakout. It's just textbook bullish price action, and now the continuation. So as I said, it should continue to move higher. Russell. Thank you, Shaz. I just went over SPX levels. You can go back on the recording when we're done here. So similar pattern. Right? I spoke about back here, if you go and watch the videotape, where things were looking questionable. I said, this is a bullish pattern. Right? This makes me think it's going to go higher. And it came up and it looked like it could come up here. It didn't, came down. This is where things got crazy, the breakdown, the recovery again. And now this same bullish sideways pattern at resistance. And so you would imagine the 200-day is the next stopping point up there. And as always, we look at subjective reference points like a moving average. And we say, is there something lined up with it? And we could see that, yes, there is, up in that area, and a big whole number. So, right, we always have theoreticals as to what the probability is of something happening. So this pattern saying it's going to go higher, where's it going to stop? Well, it makes whole number, 200, resistance, all of that lining up. Right? So whether you are Fibonacci people or trendline people or Ichikumi cloud people have something up here, well, lucky you. You're in the real place as to where the real resistance is. So there you go. Let's look at the, what time is it? I'm getting late here. Right. So same thing, looking at the ETF. Right. You look to the left, 150, 148 or whatever. Here's the 200. Here's the congestion. There's an unfilled gap. You got to know all your reference points. You don't have to stare at them. You know, you should have the ability to do something like this, where, you know, you just click it, different platforms, and say, hey, set me an alert there. I want to know when that happens. I don't want to watch it. Maybe I'm watching something else. Let the computer work for you. Bonds, still in a coma, going sideways there, doing nothing. Oil is up a little bit, right? Up at resistance. Got to like the bottoming tail bar as a continuation. Gold down a bit in a coma. Silver looking good, coming up to resistance. Be aware of your reference points. And of course, we want to see the transports participate in this head and shoulders, which they cleared the right side, suggests higher. Let's keep an eye on that too today and see where everything ends. All yours, Dan.
All right, thanks. Hope everyone had a great weekend. And yeah, we made it very clear in the weekend letters that the patterns totally look higher and that we're going to trade them higher. But, you know, just with that sentiment, we're going to have one foot out the door once we see failure. But the charts looked fantastic. And we have 9 open longs. And so that confirms what our buy. You're saying I'm mute? No, it might be sound test. I got both of them on. Yeah, no, Greg, it's just you.
I know, my setup from reinstalling.
Okay, all right. So yeah, I was just saying that we got 9 open longs. We were totally bullish. Markets look incredibly higher for the 30th time. I can't explain it, but that's not my job to explain it. So our only open actually in the weekly options is Boeing. So I tighten the stop on that. We have 8 opens or 9 opens We have a lot of junk. You know, we've been bottom fishing. We got a put spread on ALK, CCL. We have a bull call on debit spread or diagonal spread rather. That looks good. JetBlue, same. Kura, a little breakout on Friday. We bought Love, another airline. We got a put spread, another cruise ship, Norwegian. We're long calls, C's, another beat up entertainment stock, nice gap up, that looks great. Six Flags, another beat up entertainment stock. And SPGI. I can't tell where it's opening, but we have a covered call. And that's it. So, you know, in retrospect, I wish we had a call. And this is going to invalidate a lot of our plays. Obviously, we have both a directional. We have a directional on the SPYs and a put spread. I had a put spread on IWM. That looked like a launching pad. And these gaps are going to mess them up. Yep, Marriott was on my list. That was going to be a put spread. DRI, breakout, that's gapping up. So unless you're the beneficiary of a lot of open positions where you can sell a little in the strength, for new trades, I don't like these gaps one single bit. But we'll apply our same methodology as we always do and see if we can get an intraday setup. I see pre-market Facebook here in the FANG department is on a roll, but there's no pattern there. It's up too many bars. Google breakout at the gap. Yeah, it rallied to resistance. Had 2 consolidation days. Netflix has been lagging. I got really no interest in that one unless it's just a Tesla. Tesla's it's in a trading range for a couple weeks. That's a put spread candidate. Let's put that on our list. Oh no, see, Greg, you didn't interrupt me. I'm not trading Tesla anymore for put spreads. We'll day trade it. Ahmad, you're dropped in. We will day trade Tesla, but I'm not giving that to our subscribers anymore. He's too wild. All right, let's go to gappers here. REGN, anything gapping down is weak. I have no idea why this is gapping down. 549. Okay, this is a beautiful call spread candidate. Now I know it's a bio or something like that, but that's a beautiful call spread candidate. 30-minute low NVAX. I think this is, the media is trying to say why the market's in a good mood. Vaccine news, but there's no pattern there. NVAX, unless maybe day trade if you get a double bottom on the 15-minute chart. So pre-market, it's actually bullish. It went up, it came in. If it can then move up and maybe around the 1030 reversal, give a double bottom, then that's a day trade idea. I can't tell where you're gapping. BNS, it had earnings. Same with this, earnings plan, gapping down 48.50. 30-minute low, maybe a day trade setup or an M top pre-market for a day trade. HPB gapping up. It's gapping up too much and it's been up 5 days in a row. You're gone. BA, no pattern. You're gone. AZO had earnings. It was actually, I thought it was down pre-market. I see a print here, 1175. We'll come back to you. I see no prints. Boeing, we mentioned, we got a put spread on this. And VXX, I told Greg yesterday, I said VXX under Thursday's low looks like a short. And it still does. Let's keep VXX on our list. I can't tell where you're gapping. GSX. McGraw, I think this is the one you gave me as a call spread. So yeah, watch it on a bounce. Kevin, AIG, 30. Yeah, I like that one a lot. I don't need SPY up here. Yeah, I remember, I think Debbie mentioned that last week. Yeah, it looks good. Yeah, that looks, for a new gap trade, that looks fantastic, Kevin, because it's not gapping up too much. 20 and 50 are curling. You got your price void. So the only thing we need to watch is, just because this looks fantastic, you got to be careful with these big market gaps. Consider the big market gap, the tide. If the tide's going to come in 30-minute low, we just got to be careful. You said BGS 2284. Yeah, that's a buy setup. The only couple caveats I have, it's a fairly deep retracement. Number one. Number two, it's a retracement from a bunch of overlapping bars as opposed to a V top. And number three, you got a bearish reversal on the weekly. So the time frames are not in agreement. Charlie Bravo, yeah, I do miss the entry. I mean, you said you're in it, so just trail. But for me, there's no entry. SDC 785. It's a put spread idea. I like all these bars. I don't like the way it came down unless it's just a day trade. Berman, I have this as a put spread. I like the bottoming action here under last week's low. Berman put spread. McGraw, keep an eye on it. Pool. This was, I looked at this. It was mentioned in Barron's for some reason. Amazing strength. It's just amazing. There's so many stocks at all-time highs. XLI, a lot of these ETFs look higher. Hey, Greg, on our ETF trader with these gaps, do you want me to send out an alert saying just hold off because of the gaps too big, or because otherwise the rule is a 5-minute high? XAR looks fantastic.
Depends on where they're gapping too.
All right, then we gotta look one by one. SPG. This was actually on my short list. And this is Simon Properties, the malls. Everyone's talking, I'm not a fundamentalist, but I use common sense in fundamental analysis. And everyone's talking about having less office space. Now, I know I'm talking a mall versus an office building, but I'm saying the whole sector, the commercial REITs, I think are going to have trouble. But this has been going sideways for a while, so I don't know if it's going to go up or down.
Facebook says that in time, 50% of their workforce will be working from home. So those buildings, you have to, what you're saying, common sense, yes. This thing has resulted in everybody realizing, I don't need to go to the office.
Right. No, you'll save a ton of money, sure. And Greg, your audio is not as good as normal. You change anything there?
Everything changed. So yeah, I have to check on all these little things.
BTR, that was a beautiful, beautiful close.
That should be better.
Yeah, much. The gap, will watch it, but Ahmad, beautiful close. That one, I would have had 90% confidence holding that over the weekend. It's hard to get on board right now, but I love that, the 1, 2, 3, 4. Tilray, it's not a 1, 2, 3 because the tail's too big. The Friday's high was too big, but that doesn't mean it can't go higher. TDG for Jacob. You gotta let I'm not gonna rush into anything. We gotta let these things set up. I like the AIG though, as a new gapper. I'm doing absolutely nothing at 9:31 on a first day of the trading week, but